What's up, New York? My name is Sandra Triolo. I'm a registered financial professional with New York Life, and sitting next to me is my business colleague, Miriam Jacobs. At New York Life, we offer protection through life insurance. We also do investments, and we help plan for retirement.
All families are made up of breadwinners and people who depend on them for that income. So, for example, a husband and wife, they're both employed, they have 2 kids, and if for whatever reason that husband does not come home that day, right, what is the position of the family? And life insurance will replace that income. So if he has enough life insurance, although we know the family will be mourning at the time, but when your insurance agent comes and hands you a check for $1 million or $500,000, it says that that husband would have loved his family so much that he wanted to protect them. If for any reason he wasn't there, the kids would be able to go to college, they're not going to lose the house, and the wife will have enough money to take her through to retirement. And that's what we try to do. We try to work with our clients or neighbors to make sure they have a plan in place. We have circumstances, we've spoken to like funeral directors and pastors, and they've told us that many times when somebody passes on, the family doesn't have the money to take care of the funeral, and sometimes we need to do a GoFundMe account and they need to raise funds. And we're saying with proper planning, if you sit with us for 15 minutes, we will be able to sit with you and prepare a plan for that family, for your specific needs, that will avoid that. It also means that the family can go on as usual. They don't have to change jobs or lose their home. Life will go on, well, not necessarily as smoothly, but certainly the emotional distress of losing a loved one will not be compounded by not having enough money to take care of the family. You know, we could put ourselves in that person's shoes, someone who passes, and looking back, they will say, oh my gosh, I did not take care of business. I did not leave enough to fund my children's education and take care of the house, and even just have a good life, you know, be able to replace the car, you know, things, everyday things that are important to people, right? But if he did it, that would be a game changer for the entire family. They will be happier. They will be able to live in their own home. They wouldn't have to depend on family and friends or even go on welfare to take care of their everyday needs. So we call it a love letter. Life insurance is a love letter that people will leave for their family. That's why we have to sit with people and do a planning strategy ahead of time, because what we do is we look at what the income of the person is. It's called the human life formula for assessing the value of what your life insurance needs should be. So let's say, for example, you will work for $100,000 a year, right? What we say is that if you have young kids, for example, you need to be able to have 10 years worth of that $100,000. So you really should have $1 million in coverage. Many of our clients, they have life insurance from their jobs. It's a benefit. Most companies offer health insurance with a life insurance component, and many people walk around, you know, feeling, you know, they're covered. But many times those policies are like $30,000, $40,000, and they will not protect the family going forward. $40,000 will probably cover the family for a year or maybe half a year. So what we say to our clients is to look at your income and project at least 10 years. If you were to die suddenly, what your family's needs would be over that 10 years, because to replace that income. So that's a formula that we use to recommend how much life insurance someone should take out. Of course, everybody will die. That's a 100% event that's going to happen. We know it's coming. The question is, how will we be at the end at that time? Are we going to be confident to step over to the other side, knowing that we've taken care of business, or are we going to be anxious and say and live in regret that I didn't do what I had to do? I spoke with a gentleman I met recently. He was in his 70s, and he was saying, somebody came to me 30 years ago and said, why didn't you take out life insurance? And he didn't do it. And at 70, he had a health challenge, meaning he was uninsurable, and he said, I regret that I did not take out that insurance policy 30 years ago. He said, it's too late for me. And we don't want that to be the story for our people in Brooklyn. We want our people in Brooklyn to be prepared, to be ready, because no one knows the day or the hour, right? We could leave home quite healthy and not come back. Same with our spouse, same with our kids, right? And we would like to get the word out, the message out to our people, because you are our people. We want to make sure you guys are protected. When grandpa dies and then grandma dies and leaves a legacy, leaves enough money for the next generation, and each generation does it, that is the game changer. That is how we build intergenerational wealth. That's how we get off 3 jobs to make ends meet. Because what happens is that if each generation does it for the next generation, it compounds. And one of the things we are very excited about is what we call child gifting.
Essentially, how child gifting works is that if you take out a policy on the child and you take it out for a certain amount of years, you can do 5 years, 10 years, 15 years, or 20 years paid. Essentially, that means that you can take out the policy over a period of 5 years or over a period of 10 years. And then once the policy is paid up, the company will continue to pay the premiums. And so there's no money that's due, so the policy's already paid up, and it essentially means that the child has enough money that can take them right through to retirement. It can pay for college education, and it takes them right through to retirement, and it actually pays up until the age of 121, accumulates dividends and interest. And so that child would do the same for their children, and that's what we call generational wealth. So it keeps on going on through generation after generation after generation. It's done in a lot of different communities, but it's just our Caribbean people don't recognize it and they don't understand it. So we're trying to bring around financial literacy so that we can teach our community how it's done.
New York Life is the largest mutual insurance company in the entire country. We are all over, we're on all the states, and what that means is that the policy owners own the company. So all our policy, all people who have products and services with us, that's how they receive at the end of year. When the company makes profits, they receive dividends, right? So it's like the profit sharing of a mutual company. And the company, of course, is AAA rated. That means it has the highest rating of any company. It's AAA rated. It has the highest rating of across all the rated agencies in the U.S. And it's a 180-year-old company. So we've been here a long time. And we will recall that during COVID, when many insurance companies were not paying out because of the large numbers of fatalities, New York Life paid all of its claims. Our experience is that if someone passes away and they leave, let's say, $500,000 to the family, to the beneficiary, this is something that we completely love, because we know that that will translate into a better life for the family. So we encourage our beneficiaries, those who receive the money, to reinvest it in their own lives, in the lives of their children, in their family, by taking out another policy, or investing in mutual funds or retirement account or long-term care, so that that legacy, the legacy of the person who passed, will be honored, because they would have taken that that time, that investment, to make sure that the family was okay. And it's like, a duty, a responsibility that you have to do that for the next generation as well. And now we know we're not by any means trying to say that this is easy, because putting aside that $100 or $150 every month or every week is a sacrifice. You have to give up something. You may give up that that movie you wanted to go to, or that trip you wanted to take, and that sacrifice, we feel, should be honored by those who become recipients of it, because they would recognize that this person would have done something for us, and therefore it's an obligation that we should have to do it for the others in the family, to make sure the whole family progresses and not just us. So we wouldn't fritter it away very quickly. Within 6 months it's gone. We want to make sure that that money, that sacrifice over dozens of years, it's like 20 or 30 years, depending on how much they would have invested monthly, that has to be honored. We can't just ignore that sacrifice, especially if it's someone close to us, or dad or granddad. If you have parents or grandparents and you want to find out whether they will qualify, you can give us a call. We'll discuss your specific situation. We recommend that parents, grandparents, even before the child is born, while the child is still in the womb, that they engage with us. Look at your financial plan. We will tailor a plan specifically for you and for your family. Even if you're separated or divorced, or you have kids in another relationship, that's no reason to not proceed. We will work a plan specifically for you, a strategy that will make sure that you are protected and your kids are protected for life.
So what long-term care does, we have policies that you take out, and then what long-term care does is it pays if you have to go into a nursing home, if you can't do the daily activities like bath, for example, bathing, and if you can't dress yourself, for example, then long-term care, you'd need to go into a facility, or you could be taken care of at home, and then long-term care, the company will pay the monthly premiums. The cost of long-term care in New York City could be anything from up to about $170,000 a year. A lot of people lose their homes because they don't prepare for long-term care. So if you don't use the policy and you don't need it, then what happens is the company will refund 80% of the money back to you.
When someone comes in, a family comes in, and they are able to get that protection that they need, I feel as though I have accomplished something on behalf of our people. I feel as though it's a contribution to the legacy of our people here in Brooklyn, that our future is assured, that if we could multiply that over all the families in Brooklyn, I feel we would have turned the page in terms of our contribution to New York, our recognition as a discrete group within the society, and of course take care of our family back home. We would have laid a sound foundation on which the wealth of our people could be built.
If you're interested in learning more about how we can protect you and your family, my telephone number is 929-672-7200.
If you are interested in learning more about New York Life's products and services, you can reach me at 347-780-5648.
I want to say a big what's up to all my clients, and thank you very much for trusting me and for trusting New York Life, and a big shout out to my daughter Ashley.
I would like to say what's up to all my clients. I want to say what's up to the management and team here at New York Life, Brooklyn office, and our Long Island General office, as well as my kids, Shani and Mali.